according to the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel that's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in on August 20th, 2021, and we just made a $45 million trade. We're gonna go over it. It is pretty crazy. I didn't notice till after hours here, but we had a play today and it showed up on the option scanner. It actually was in the top 300 trades. They usually document about 500 throughout the day, but on the whole entire market, this came in at 288, and all of the contracts now are representing a notional value of $44.81 million. So it is very crazy, but it ties into what we saw today and kind of how the week has been playing. It has actually just been very, very wild. So we got a lot to talk about. It was a very quiet day in the markets as far as data, but we got a lot of action. We gapped down, came back up here. There is a lot that we need to cover. So I got the keys. I got the plays. The ones we made today, I actually made quite a few. We even had some BABA plays and a couple of credit spreads. And then we got the outline for the rest of the week and rest of the month. It's looking like it might get a little bit exciting here. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, watch the watchlist come to life, and yes. If you often confuse Alibaba stock with a Mediterranean restaurant in random places across the United States, then yeah, we are the place to be. And the most important thing you need to do, post or watch it below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to Chad, baby. So, right off the bat, today did not have much news at all. There was not that much economic data. You did get jobless claims. It fell for the 4th week in a row, and that is good as far as the Fed is concerned, but we gapped down 300 points. We were able to come back up, so it looks like it wasn't an overreaction in the morning, and then we kind of came slightly to where we were at before the market closed yesterday, but a lot of it has to do with what we are coming into tomorrow. There is a very important expiration. I will get to that. I have a chart again that I need to show you, but the main thing about today was the digestion from the minutes. People are getting the taper fears and concerns. You know, if you think about the jobs data, then you had the virus. There was even data about the amount of hospitalizations and deaths and all of that. It is starting to increase again. Then you had more issues of the supply chains, and then you got more China escalation. Even though we've kind of got it over the last few weeks, if you actually look into what China did today, in my opinion, it seems a lot bigger than the first clap that we actually got, which was very interesting. Now, at the same time, we are getting a lot of other different moves. A lot of things have been reacting over this last few days, and one of them right here has been the commodities. They've had one of their worst weeks since the beginning of 2020, and now even the VIX, it's had its biggest weeks pretty much since the GameStop situation. So we're going to see how it ends over here. But now, coming into tomorrow, that option expiration is going to be important. But now, if you think about what the market has been talking about, Jackson Hole, how we trade tomorrow is really going to set the tone. We are either going to get more digestion, and if we end up lower, if there's more external factors like China or the virus that get people kind of reeling here, because you are right at that buy the dip technical with the 50-day moving average, we're either going to get a little bit of panic and volatility beforehand, or you'll kind of see a move like today, and that holding pattern that's been keeping us steady into Jackson Hole, that may continue. Now, I will tell you something. I may be a little bit early on this, but I started to think about it. Thankfully, we've documented a lot of this stuff. You know, a lot of people don't even know what Jackson Hole is. I oftentimes make a big deal over the Fed and Powell and love it, but I'm starting to think that Jackson Hole may very well be a dud. A lot of people are assuming that the Fed is going to make some groundbreaking announcement or something like that, but that's usually not what happens. And ironically enough, if we come back in history, just about exactly a year ago, the last Jackson Hole Symposium was August 27th to the 29th, and you can see right here, it seems like we were able to gas a little bit off of it, then it kind of held up, but then shortly after, it did lead to a decline, and that's where September started to get crazy. So I'm keeping that in mind as I move forward here with some of the plays or anything of that nature, but how we are going to trade, considering this is a lot more of a different situation than August of last year, I would would want to argue that more is going on, but if you think about it, last year you were in the middle of the pandemic, so both of these meetings had a high carrying weight to it. People were looking for that guidance, and a lot of people are assuming it's going to be groundbreaking, but we have been disappointed before. So that being said, how we trade coming into all of it and kind of how people start positioning, that will be key. And here's just a recap of another pretty picture that we showed earlier this week. This is why the option expirations are so important, because so far the last quarter, every single one of the monthly expirations, you could kind of see some of the volatility that we have experienced. So how we position tomorrow, how that frees up some of the gamma and some of the hedging. If it's a big move tomorrow, that will be key, but I'm sure by Monday we should have a little bit more wiggle room. So coming into the company news and events now, China issued way more regulatory crackdowns today on their tech stocks. They clapped Tencent and Baba. They did everything from advertising standards that they're going after to employers and employees with even like driving companies. And then they even also made a very rare rebuke to Evergrande. This is one of the biggest Chinese real estate firms, and they represent a big issuer of Chinese investment grade bonds, but they told them that they need to resolve their debt problem and refrain from spreading untrue information. So that's kind of a warning. I do not think that has any good implications, but you saw the Golden Dragon Index get very, very clapped today. Baba is heading towards a multi-year low, and even in Hong Kong, Baba is trading at a all-time low, so keep that in mind. But coming into oil now, you had the worst consecutive day drop since February 2020, and now this is the lowest close since May. I would keep a watch on the $60 level, and then 55 and 50. If we start getting there, and we start getting there quick, that is definitely a warning sign for the market. But you even had news out of China that they want to limit some of the steel and commodity use that they're having, which is kind of a rare move on their part. You saw commodities take a really, really big dip today, so that was key. Another big key piece of news was Toyota and Nissan announced plans to stop production. They're saying it's because of the chip shortage, and even then now, a lot of other automakers weighed in on it, even analysts, and they're saying now that this could lead to about a 7.1 million shortage of vehicles being produced every year. So not looking too good for them. A lot of people are talking about this, and it definitely had an effect today, so keep your eye on that. Then coming back to the antitrust stuff, FTC, the FTC, they amended their complaint with Facebook, and now they're even suggesting that they should sell IG and WhatsApp because they bought all their competitors. They say it sounded really aggressive, but I would definitely keep an eye on that. It relates to one of the plays that we have. Then acting FDA chief Janet Woodcock, she was ruled out as a permanent nominee. And then on the virus side, we were just talking about it yesterday. This booster review has been postponed by the CDC. They're kind of taking in context what the World Health Organization has said about not giving booster shots until the rest of the world gets it. So interesting flip-flop there. We will see how that plays out, but keep an eye on the vaccine stocks. They've kind of cooled down here in the midst of everything. So there was that. Then MLB strikes a new trading card deal with Fanatics. That is the company that Jay-Z invested in a couple days ago, but it replaced Topps, and that is with Muds. I believe it was a SPAC just days or weeks before they're about to do the review and conversion, so it does put the deal under pressure, so we'll see how that one plays out. Then after hours, you had AMAT topping estimate and beating. Very, very good for the chip makers. And then pre-market today, it was an epic leader, Macy's. They led the morning. They had a good report, and they are bringing back their dividends. On to the random piece of news, but it could relate here to banking as well as their plans to even go public. But OnlyFans said they are going to be barring sexually explicit videos starting in October. So now you can save your money and go get a membership on youtube.com/thestockmarket. No, we love you. We love you. But y'all nasty. That's nasty, Josh. Then finally, Janet Yellen sent a letter to Congress earlier today saying that states and local governments can use some of the extra pandemic relief funds that they have or allocated in other places for additional unemployment aid. And this would be if people get worried about the Delta variant or if it does take a dramatic turn there. And this one is very interesting because it kind of flies in the face of that unemployment number that the Fed has been talking about. So all in all, we are going to have a very exciting close to the week. How we set up for next week and the potential implications or potential to disappoint, it is going to be very exciting. So I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different stocks that I'm looking at coming in tomorrow, and I'm sure you're interested in that big play there. I did go in decently big. I spent about $1,000 on it, but I was surprised to see that much volume on it after hours. And then when I looked up the options there, it did show up on the scanner. So that first play is going to be UUP. Now, full disclosure, I've played this before. I've been absolutely wrecked on it, and I'm still holding a couple of them, so I do have time. I would like more time, but now I'm looking at it here. It seems like we are at a boiling point with global currency. So if you think about what I've been saying over this last week, hopefully it shows you some continuity, and you can kind of see where I'm coming from here. If I'm more worried about what's going to happen overseas and outside, not necessarily here domestically, it makes sense now, especially with a lot of global currencies falling below key levels, essentially with like New Zealand and what happened yesterday, or if you go look at any of the other global currencies, if they start to go on lockdown, if they still need to do stimulus, that would weaken their currencies. So taking calls on UUP, calls on the dollar, that would make sense. And on top of it, we've been getting a lot of China escalation. If that situation did get out of hand, why I do like it is that it would cover a China devaluation, any of the other countries shutting down, or again, any of those countries weakening, as well as just generally what we've seen with bonds. The bonds were kind of outpacing first, and the dollar started to move, but as Marshallian K indicators and people are concerned with liquidity, that could be implying that the dollar is stronger than we think right now. So I really like the play. I'm gonna ride with it. Someone said, oh, you could probably make it free. I think I'm gonna push this one out, and I just want to see how it develops. I'm willing to take the risk. We got some nice profits off of the old BABA puts that we had, so I pretty much transferred the free trade into that, and then we'll go from there. But I will tell you this right now, especially even if you remember the last TLT, even with the bonds, this isn't a play that translates into a direct hedge like UVXY or SPY put. So if the stock market goes down, UVXY shoots up, the SPY puts would go up. Essentially, there could be global volatility, and UUP can actually come down and then possibly have a delayed reaction. I'm fully prepared for that, so keep that in mind. And like I'm saying about TLT in March 2020, if you remember, we had a pop the first day, and then the next day it did start to come down, and then eventually it did go on that tear. And that is the same thing in this case, where it is not really having the same correlation as a direct hedge to the market. So there is a lot of other factors and forces competing. So as far as the play, I decided to go with 100 of the October 15th 26 calls. They were 5 cents a pop, and I still have these old ones right here. I'm down 1,000 on these ones, another 1,000 on these, but I made these plays about 6 months ago, so that was about $2,000 right there. $2,000 every 6 months for insurance. I mean, what, $4,000, $5,000 a year on over $200,000, $300,000, you know, between the accounts, because I did grab another 100 of the same play on the Robinhood. I have the exposure. I wish I did get more time on these, but I'm able to take advantage of the discount. And even though it's not a direct hedge, I do see this as some of the more cheaper premium that I could acquire. You can see the delta is at 13, but there was a lot of other random plays that showed up here with similar values offering less delta. So it's a pretty decent exposure if you think about it, but given the price, it is very, very good. And now take a look at all of this right here. Here is the IV metric that you could see for every single one of these top options. The one thing I really like about this trade, it is not a crowded trade, and you could see it, and this is because of the general asset. So one part does have to do with being crowded or not, but in general, the dollar does not move a lot at all. So if you've been keeping your eye here on the IV metric, you could see these are only at 8%, so it's not really pricing in too much. It has a cheap price. There's something about that that I really, really like. So that was the first play. Good luck. Again, none of this is a recommendation. If anything, I do want you guys to be able to learn. You've been able to learn from the failures. You're able to been watching these videos, see how I'm coming to this conclusion. So do not let your imagination get the best of you. Do not go outside of your means if you do decide to play it. And overall, think for yourself and find a way to do it. You know, this is what we love showing. I hope you guys learned from it, but don't use this as an excuse to make a gamble, or even if you could back it up with data just like I can, it doesn't change the fact that these are derivatives and there is a lot of risk, baby. So I hope you understand that. But that was the first trade. Coming into the second trade today, I went with those HD puts. I did a credit spread and I bought puts. I was trying to snake the chain in the morning. The spread was really big, so I was like, okay, I'll put in an order, see if I get filled. I didn't think one order would get filled, then I tried again, then it came in a lot lower. So it gave me a pretty weird average, and I ended up getting more than I wanted. But the plan with it was I was going to buy a couple of the puts in the morning. If it did drop with the market and we kind of saw an early turnaround, I would have just been able to ride those puts. It kind of would have done what I was expecting. But then if I was wrong on those puts, it would still kind of hold the exposure. And then my idea was I could go and turn it into one of those in the money credit spreads like we've done before. So I got two different trades. The first one, as far as the put, I grabbed the next week 300 puts, 7 of them for 47. This one I spent a little too much on. And if you notice the K-Web and NetEase, I feel like I should get a little bit more time, but they were very expensive and the spreads were all over the place. But one extra week could change your life. That's the only thing I don't like about this put here, but it did definitely trade interesting. Only ended down 5%, has a very wide spread, so I think it's kind of pricing in a little bit of that volatility given the move it's had, the earnings and all of that. But that was the first trade for the HD, and now for the credit spread, I decided to go with the in the money credit spread, and I shorted the 310 call and bought the 315 call. I was able to walk away with a credit of $4.30 per contract, and I did 5 contracts. So essentially, this is a $500 collateral play. That's the max risk per contract, $500, but I got back $430 in credit. So it's $70 of risk per contract times 5. That's another $350. And I believe the max gain on this play is about $2,000. So high risk, high reward. I spent 350 max loss. If I'm right and it drops there by next week and I break even at 314, I will walk away with $2,000. So a pretty big reward, a smaller risk. I think it's pretty decent there. But overall, I need the stock to trade like that. Otherwise, we will have to roll it over and do something else and then try to finesse it or just eat the loss. So a little bit bigger of a risk there. But that was the second trade. And then finally, I want to look at Amazon coming into tomorrow and then the beginning of next week. It's had its own mini correction and it's not being talked about. That was actually one of the articles today on Bloomberg. And they're saying how all analysts now, 100% of all analysts covering Amazon stock are giving it a buy recommendation. And despite this 11-12% move since after earnings, nobody has really talked about it. So it's kind of an interesting point. And now with that Facebook antitrust news, it could potentially lead the way. But I do want to see if we could get any cool opportunities. And if you remember from that last earnings, I have another like $500 credit spread expiring tomorrow. So that will be good. But here is that move. You got the big drop and then it has just been selling off since. So it's given up all of the Nancy gains in that one trade that we had. Good thing we did take profits, but I do think this is kind of a sleeping giant here. So I do want to keep an eye on that one. But those are the main plays. As far as everything else, I did take profits on these Babas. Remember, I had them. They ended up closing 400%, which is wild. I had 5 of them. I paid $200 each. I was able to sell 2 of them today at $600 a pop. Got $1,200 back, made them free, and I believe I already made them free before that, or this one was a rollover, but now I get to hold these, and I said, well, I'll take a different type of risk as well. I decided here to short the 150, so I would get money on these and be in the money before here, but this credit spread on 8 of these contracts, I got back like $180 or so. I shorted the 150s for tomorrow, bought the 145. As long as Baba closes above 150 tomorrow, I'll get that free credit spread there. Otherwise, if it does drop, I should make more money on this play. I will lose. The max gain on this is $3,000, but if that is the case and Baba is still dropping, chances are I will be able to roll this over for a way higher credit, way further out the money for next week. So it does have a certain level of protection to it, and it's allowing me to extract a little bit of extra money by the end of the week. So that was the other play that I made. And then finally, I forgot I had 5 of these data dogs. They were killing it today. So I said, I'll take $300-400. Sold 4 out of 5. I decided to hold one because it's still holding. Got 78 cents a contract. Not too bad. We are going to ride that out and see what happens. But as far as everything else now, keep your eye on Baba and all of the China stocks. That is very, very huge. Tesla, they're going to be having their AI event tomorrow or tonight, excuse me, but I want to see how it plays. But the level of neutrality in this stock is just honestly, it's fascinating at this point. So depending on what happens, if there is any volatility, if it does break to a range kind of like it wanted to do, that will be very, very key. So watch them. Watch XOM. The contracts went positive in the morning, but now they're only down about 20% or 30%. So oil is important, but I've talked about this play. I'm probably going to wait for a bounce in oil, and then I will probably re-short it with that same play. We'll see what happens, but watch them. K-Web, they went down. I did take profits on this one too, and this was an example I gave of a crowded trade because I believe we got it on the 4th. So again, it dropped and I waited for like a mini bounce, but then it went down a little bit, shot back up. But ever since the 4th, this is over 10% drop, and the contract for September only went up about 100%. So I talked about that's what happens when the trade is kind of crowded, and even then yesterday, we talked about getting late. It was a decent gain, but you can see here, I just got all my money back, $10 less. I got 5 more. I just wanted to make it free just in case and still keep some exposure there. So that one was an interesting play, but like I'm saying, keep your eye on for those China stocks. Then HD, I really, really like how it's been trading. We're going to watch that for some of the downside. UAL, they are slipping. I said watch this one at the beginning of the week, but now we're getting some Bloomberg intelligence data, and it's saying that July airline sales have really, really been slumping, and it's coming back down here. So expectations and guidance might start to drop here, or some of these companies were just flat out wrong from their guidance. So watch that. Watch Amazon, XLF. The bank stock's been down 5 days in a row now. I'm up 10% on that one play, but watch them in terms of value, bonds, rates, and the dollar. It's going to be key. Roblox held up today, and I really, really like that. I'm still interested in going in on this. I just want to see how the market plays out, so keep your eye on them. Coinbase, it started going up after hours here, but there was a weird panic buy at the end of the day today, and it kind of sent some things up, but I would watch cryptos as well. We still have those plays, but given this kind of volatility kill, those are probably going to be duds. Watch Facebook. It did have the FTC news. It dropped the stock. It bounced back up, and now it's chilling out here. So they've been very interesting. They've kind of been holding up a little bit like Apple. Again, very different than something like Amazon. So watch them. Watch UNH. Hit a 52-week high. This has just been that defensive play. I would watch this as just the even indicator for the market. Macy's, if it does continue tomorrow, this might be a good option. You can see the volume here today. Absolutely just unreal. It's big news for them. They're breaking out of that value, that 2020 level. So we will see how that one plays out. And then finally, UUP, baby. We've talked about this many, many times. Like I said, once you start to get above here, this is where the situation gets very, very interesting. So all eyes are on the rest of the world and then Jackson Hole. And even in the meantime, TLT did not move that much today. It did climb a little bit, but you can notice that it has held that top range more or less that we talked about. So if the bonds go first or the dollar does, we will see what's happening. But it just goes back to what I'm saying. Everything is an elevated state. We're hitting that boiling point. If we don't get another external factor, one thing I am seeing is just that Jackson Hole may very well be a dud for the market. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to know if you made it this far, you weren't meant to quit, baby. But the Cole loves you. I love you. I'm going to see you in the morning. Let's go.